Hey, Sherpa Network, ready to get geeky? Today we bring in the co-founders of Cryptograph. We discuss their new auction system on the blockchain. We get into price discovery mechanics, which are important for domain names in particular. And we also talk about how this new technology may or could be applied to domain name auctions. It is a super interesting conversation. Hope you enjoy the show. Media Options is the industry-leading domain broker specializing in domain acquisitions, high-value domain sales, and domain name consultation. As pioneers and thought leaders on the subject of the domain aftermarket and domain name value, plus through their clear domain acquisition service, Media Options offers startups and established corporations an unparalleled scope of high-value domain options, providing access to domain names and curation technologies not available elsewhere. Media Options believes in the power of a great domain name and is dedicated to helping you obtain yours. Call or email today to put a domain to work for you.
FD was built by domain investors to increase your inquiries, sales, and profit. Forget spreadsheets and archived emails. Manage your entire investment portfolio in one place using a secure and completely confidential platform. Learn more at ft.com. That's EFTY, ft.com.
Hey, Sherpa Network, thanks for joining us today. I'm Tess Diaz, executive producer of DomainSherpa.com, and today we're bringing in some specialists from the startup Cryptograph to discuss the blockchain, cryptography, and where it intersects with domains. Gentlemen, thank you so much for joining us. We have Hugo McDonaugh, a co-founder, joining us from London, England, yes?
Yep, that's the place.
Wonderful, thank you for being here. And Edouard Bessire, also in London or no?
Yes, good to be here.
Wonderful. And Andrew Rosner, not only the CEO of Media Options with the domain name background and expertise, but also an investor in Cryptograph, correct?
Correct.
Cool.
Proud investor, I might add.
Say that again?
Proud investor, I might add.
Very nice. Well, I want to hear how you came to invest in the company, but first, let's hear a little bit about the founding of the company. You founded it in 2018, is that right?
Yeah. So I mean, the founding story is it's an interesting journey for sure. I mean, I first met Ed and our other third co-founder Guillaume, who's the kind of pure tech guy, back in, when was that now? 2015, I would say.
Yes.
2015. And I met Ed at Imperial College Business School during a master's that we were both on that was kind of focusing in early stage business and technology. And straight out of uni, we decided we were going to start a company, the three of us. And we started a business in real estate technology that was building virtual reality experiences for property developers who needed to sell their homes more effectively when there are holes in the ground, right? But that was back in, I think, late 2015 when we just graduated from Imperial College. And we were too early. VR was still like, we were playing around with the Oculus Rift Development Kit 1. It didn't go off the racks as fast as we thought it would. So we're basically too early with that business.
There was no COVID.
Right, exactly.
COVID would have been convenient at that time.
Would have been convenient, totally.
Definitely.
And then we continued to experiment in the real estate technology space with other playing around with data and matchmaking engines for real estate agents with homeowners, and we were doing a lot of experimentation there. And all the while, my older brother, actually, a guy called George McDonaugh, had founded a company called KR1, which is a big sort of publicly listed investment fund that invests in early stage blockchain technology companies. And so he'd been in the blockchain space for a very long time, and he was sort of building his business and his world in that. And Edouard, myself, and Guillaume decided to meet with George back in early 2018. Probably kind of, was it February, I'd say, Ed? And we wanted to meet with him because we wanted to discuss some interesting ideas and opportunities that we were seeing happening in the burgeoning blockchain space. At this stage, Ethereum was still very, very young, and we were looking into the power of smart contracts and this whole system. And we were sitting down with George, and we were discussing all of these different potential, ideas and solutions. And then in this bar in London called Quo Vadis, about a couple of whiskey sours later, George sort of put forward the seed of the idea, which was, well, now we can create digital scarcity on the internet using this technology. Why don't we bring things that are traditionally collected in the physical world into the digital, like autographs? And we were like, oh, that's an interesting idea. Like, scarce collectible autographs. That's a cool concept. And then, when you put mine, Edouard's and Guillaume's brains and Geordie's in the same room, things begin to get a little bit crazy. And from the seed of that kind of initial idea, we left the bar 6-7 hours later. This was after many more whiskey sours. And at about 3 or 4 a.m. in the morning, sort of me, Edouard, and Guillaume were looking at each other, and we were like, we've got to do this. This is a great idea. This is something that we need to pursue. And at the time, we had another project that had a lot of development and was almost going to launch, basically. But we were like, this is really good. Let's work on it for a little bit of time. A week turned into 2 weeks, 3 weeks, 4 weeks. And we took that initial seed of the autograph idea, and out of that grew our price discovery system, grew our bigger vision of actually any kind of media can be represented in this way. And the whole recipe that we have with the philanthropy angle, all of that sort of grew out of that seed. And a couple of months later, we'd written our white paper. A couple of months after that, we raised our seed round. And yeah, the rest was kind of history, basically.
Let's. You mentioned the price discovery engine, and that was, ultimately what drew me into Cryptograph, what got me most intrigued by what it is you guys are doing. Talk about that a little bit.
I'll let Ed jump in there. He's our price discovery guru.
just for everybody's understanding. So price discovery, as we've talked about many times here on DomainSherpa, is about taking an asset which probably doesn't offer much liquidity, and therefore price is not easy to establish. And in the case of domain names, that is the case. Price discovery in the domain market is very difficult because these domains aren't liquid. Timing is everything, right? So a domain could be worth $5 million to the right buyer on the right day, but the day before that, it might be worth $25,000. So establishing what is this domain worth is a very difficult thing to do. And it's something I spend a lot of time trying to think about because I think it's the biggest problem in the domain industry. I think it's the single biggest hurdle to domain names becoming a mainstream investable asset class. And so price discovery is, the pursuit of a bilateral agreement on price where you've got a buyer and a seller, and in an illiquid market. Is that a fair definition?
Yeah, absolutely. Like we started with this idea of, let's get medias, let's get autographs, let's get something that's unique. And I was going first as like art/memorabilia, and then grew out of that. And these are unique assets. So any asset that is unique or that is only sold very rarely, if ever it's an asset that a few of them exist or several of them exist are identical, cannot be priced through a market efficiently. There's no supply and demand balance, absolutely right. So unlike a commodity, the pricing these unique assets, or the assets that are very illiquid, has been an issue for
There's a
thousands of
strange
years.
fan sound when you speak. I'm not sure what that.
So we got the feedback issue resolved. Fabulous. Edouard, you were just about to delve a little bit from your mathematical background into the price discovery system.
Yes. So as I was saying, for us, the challenge is pricing assets that are unique or that are sold very rarely, because there's no efficient supply and demand balance, like for a commodity like oil or aluminium. And so the system that's been used for hundreds of years now is the auction. And of course, there are many different variations of the auction system. And it's basically about, we have one seller and several buyers, and there are variants if to sell several items. But the auction is especially well suited for these assets that are unpriceable or that can't efficiently be matched for supply and demand. And so that's where we started, and because we were looking at many different ways that these assets were being sold and traded. Because what's very interesting with blockchain is that it brings new mechanics and new business models. It's not just a technology in terms of adding new features. You can actually build new business models and incentivize stakeholders in a new way. And what we saw, for example, at the time when we started a Cryptograph was unique assets being sold with a specific code where you can only resell it for 20% more than you bought it, for example. And these are things that that are new. People never thought of. I think not that we saw like putting a pricing that goes up or that goes down or that needs to follow specific rules. And so we looked at this and we went down the rabbit hole of what can we do, what kind of new system we can build. Is there a better way to do an auction on the blockchain? And at the same time, the blockchain brings new challenges in running auctions. And one of them, and we'll discuss that later, because right now is a very important debate in the blockchain space, especially for the Ethereum blockchain, is the gas prices. And one of the reasons that we went down to design our price discovery system was also to mitigate gas prices, which are a price that every person that wants to interact with the blockchain must pay, like a transaction price. And so for us in our system,
if you want to post a transaction to the blockchain, to the Ethereum blockchain, you pay a gas price. And as demand for posting or interacting with that blockchain increases, gas prices go up. And as demand decreases, gas prices go down. It's a function of it's a security function really, but also an incentive function for the miners.
Yes,
just wanted to sort of clarify because not all of our audience will be familiar.
Yeah, and so one of the particularities of our auction system that we ended up designing was that when you place a bid and you get outbid during an auction, you get more money than you bid, you get more money back than what you started with. And so this was supposed to offset and even go over reimbursing the user for that transaction fee, and which was one side of it. And the second side is that we could incentivize bidders to participate when in auctions that traditionally had low liquidity. And that's where it's quite interesting. And that goes back to the domain name kind of market, because each domain name is a unique asset, the same way that what we started with, this unique memorabilia are.
Yes. Tell me, I want to touch, so, at the end of the day, Cryptograph, the technology behind Cryptograph is an entirely new incentivized auction system, right? Fair enough? Yeah. So let's talk a little bit about like the original or traditional auction. And as you said, there's many different Dutch auctions, God, I can't even think of the names.
English auctions, Vickery auctions.
Vickery auction, English, exactly. So lots of different types of auctions. Yeah. And, different ones are well suited for different circumstances. Things that have a time expiration, like a hotel room or a flight, are well suited to a reverse auction or a Dutch auction, as it's called. Different circumstances are well suited for different types of auctions. Mm-hmm. What is, obviously this is a rhetorical question. I know the answer, but explain why the incentives baked into the Cryptograph auction system are better for the types of unique assets that you want to sell. Okay,
so in a traditional English auction, which is the one that most people know, that if you go at Christie's or Sotheby's to buy something, or on eBay, not for all of them on eBay, if you don't place your bid in advance, simply that the bid goes up, you place your bid, and at the end of when you're the last bidder left to place and no one outbids you, you win. And in that system, as a bidder, I'm going to keep bidding up until I reach the amount I am willing to pay for the item, right? And for example, if I wanted to, the maximum to pay, right? So if I want to buy something at auction and I'm against you, Andrew, and you want to, and in my mind this is worth 100, and in your mind it's worth 150. As soon as the bidding gets to 101, I'm out, because for me this is worth 100. And basically, and the way we looked at this is, if someone was willing to pay 150 for this, and we didn't get to that price, but if someone else was against, someone else wanted to pay 140 was there, the price will have gone to 141. And so the idea was, how do we build a system that keeps the fundamental principle of the auction, which is of a transaction, which is I'm willing to buy the item for X, and the seller is willing to sell it to me for X. The transaction happens. And at the same time, try to reach closer to this 150 you're willing to pay in our example, right? And so, and if we do that, if someone came and put 140, you will pay 145, 142 for it, and you will still be happy because you paid a price you were willing to pay and the value you were willing to pay for it. Right? So the idea was, how can we make a system that pushes me, the person that right now I think is only worth 100, to keep bidding after 100, if I think that maybe I don't have enough money to spend, I can't spend much more on this, but I want to push the next bidder to the true market value of these assets. Right? So that was kind of how we looked at this at the beginning, which was changing the dominant strategy of the auction into one where I will keep bidding if I think the item is worth more, or, and it's a mix, or if the expected value I get from my bid is positive compared to the possibility that someone else is gonna outbid me. And this then the last one on this, the other side of this, not just on the price point of pushing people to bid higher, is even just the idea of getting more bidders to partake in an auction. Because this, as you said, the liquidity part is very important here, is that if only 2 people partake in an auction, or 5 people take part, or 10 people, you're going to have a very different price discovery that's happening. And if more people are competing, and you get to a different valuation. Like if they are, and so the idea is, how do we incentivize people to even just get onto the auction? And there are a few examples in history for like corporate mergers or things like this, where some companies are paid just to get into the bidding because there are very few bids. So there are situations already that exist where people are just given handouts to get into biddings. Because, and so what we see with our system is this,
this happens all the time, right? I mean, so I've been the stalking horse bidder in a lot of different auctions, and I say, look, this is what I'm willing to bid. And sometimes they'll put that full amount as the first bid. Sometimes they'll put some percentage of that as the first bid, knowing that then I will be willing to participate. And if I win the auction, if I do not win the auction, I get a percentage of the sale. And if I win the auction, then I have a discounted price. I think the important part of what you're saying, what it all comes down to, is that you guys have figured out a way to change the incentive structure. And once you change the incentive structure, you change the strategy. And so the way that I sort of think about it, and correct me if I'm wrong, but the way that I sort of think about it is almost like, an options trader, right? So if somebody is an options trader, generally speaking, they're not really interested in buying a stock to hold it long term. They're just interested in the market action. They're more interested in the price action. And so they know that by participating in that, they can earn money, a premium. So, let's just say that, for now, you guys are auctioning off collectible art. I imagine that will expand in the future. And you know, I certainly am hoping to introduce your technology for domains. And so let's just, you know, hypothetically talk about a domain name. And so if I take, you know, any domain name, xyz.com, and I'm going to put that on an auction. There might be, you know, let's say 50 people in the domain market who say, oh, you know, realistically, that say, I want to like really take a stab at buying xyz.com. And each one's going to have a different sort of target price, a max price. But those people, and this is probably not a great example because 50 in the context of the domains is not a bad number of bidders. But if you had one that was, you know, there was 2 bidders, as there was just a couple days ago, I bought naturopathy.com for $25,000. There's only really 2 bidders. And so I would have paid more, but because there was nobody else there, that's what it sold for. And if we had 100 people, then you can, at the end of that auction, you'd be able to say with a relative degree of certainty that we discovered the price, because you took a large enough sample size who were incentivized to for whatever reason to participate in that auction, and you know, whoever was the top bidder, clearly that was the highest price. And so the larger the sample size, the better and more accurate your price discovery is going to be. I think that fundamentally is a really important thing to understand. The larger the pool of participants in any auction, the closer you're going to get to the actual price, the actual value. And so then I guess if you back up and think about, all right, so how do we increase the sample size of interested parties participating in an auction? You know, and there's going to be, today, there's only one, let's say, profile of a bidder. And that is somebody who really wants to buy that domain and own it for life, or own it until they sell it for a higher price, right? But they legitimately want to buy that domain. There's absolutely zero incentive to participate in an auction unless you believe you're going to win that name and want to win that name, okay? Or art or whatever it might be. And what you've done is created a system that inherently incentivizes the options trader to come in and say, well, I've got an idea what I think that's worth, and I don't necessarily want to own it, but I know I can bid in this range, and I know that my downside is relatively limited. The risk profile is relatively limited because there's always going to be a bidder behind me. And secondly, because I have some indication of what I think this thing is going to go for. And so as long as I don't go higher than that, I will make money by simply participating in the auction, by being one of the participants in that sample of interested parties. And so that's what you've done, is you've created this incentive where each person who places a bid is rewarded for that bid if somebody outbids them.
Yeah.
So if I bid 10, Tess bids 15, I'm going to get a percentage of that outbid. Is that correct?
Yeah.
Yeah.
So let's talk about that, because that for me is the most exciting thing. And in the context of domain names, that is the game changer. Is that incremental incentive is as small as it may be, is game changing. And I think people will understand after you guys explain it.
Yeah. I mean, I can touch a little bit more on it. I mean, I think one interesting thing to pick up on there is you're right. When you are being rewarded essentially in real time, trustlessly and decentralized via the system we built on chain, That's a very
sorry. Not to go off subject. Touch on that for a second, because that's also super important.
Yeah, it's super important. So like when you consider auction systems today, right, or the English auction in Christie's or Sotheby's, you're talking about a centralized system. You're talking about people in a room and an auction house, and they're saying who's bidding what at what time, and they decide at the end, okay, it's gone to this person, and we're going to grant you the asset, and you're going to give us the money, and it's a real-time physical process that's not automated by any means, and has a lot of pitfalls in it as well. There are risks associated. Am I going to default on my payment? Am I going to do it? Or, am I going to run away at the last minute,
Also bidding fraud, right? Like, so in the domain industry, bidding fraud is a major subject, very controversial. And this solves that, right? So now you're taking what was previously, fraudulent, right? Like somebody who wasn't a bona fide intended buyer. Yeah. Let's take shill bidding, for example.
Yeah.
You're taking somebody who was not a bona fide intended buyer, participating in an auction with, the intent of driving up the price, but not buying the domain. And, but that's being done in a nefarious way.
Yeah.
And what you guys done on this subject is taken that and turned it on its head. You've legitimized it, rewarded that, and baked it into the price discovery mechanism.
Totally. So, in our system, right, like in our auction, which is secured on the Ethereum blockchain within a smart contract, right, that you can't change, you can't corrupt, you can't manipulate. There are two outcomes in an auction. I either win the asset or I make money. Those are the only two outcomes here. And that's very, very exciting as a price discovery system.
Those are the two outcomes if you're a bidder, participant in that auction.
Indeed. Yeah. You can't just sadly turn up and look at it on your computer screen and make money. You do need to participate in bidding. Yeah. That would be quite an invention.
Can you say something mathematical about how it works? If everyone is incentivized to bid, I would think from my naive, non-mathematical background that alone would drive the price perhaps past a valid valuation, or that because everyone is so incentivized, it goes too far up beyond what someone, say, intended to bid or wanted as their maximum bid. Is there a psychology or a mathematics behind that?
Well, I can answer that.
Math, but psychologically, or let's say pragmatically, every person who bids, because these are no reserve, right? This is not a reserve auction. There's no incentive to push a price up just over the reserve, so that these are no reserve auctions. This is what you call an absolute auction. Right, so every auction will end with a sale, assuming that you have at least one bidder. And the reason it will never go above the price is because with every bid, you run the risk, if you want to call it a risk, of winning. Sure. Right, so you're disincentivized from overbidding, and you're incentivized to bid as accurately and as closely to your max bid as you can, because if this is where Edouard can get into the math, because this goes over my head, but like the bigger somebody outbids you, the more the reward.
Yeah, so exactly. So the incentive goes further than just the incentive to bid, right? So and also to add to what you said, Tess, the fundamentals of if I'm willing to buy this item for X, like I bid X and I win, I have paid X, right? So
prepaid.
Yeah.
When you bid, at the time you bid, the amount you're bidding is already locked up on the blockchain. So there is no fraudulent bidding. It's impossible.
Yep.
Fraudulent bidding is impossible. There's no question about it.
I mean, that's huge. So I think the piece that I was missing is the more you are outbid, the greater your reward is.
Yeah, so basically, because this is all based on math, there is a formula that follows how much people would earn as an incentive if they are outbid. And the moment when you place your bid, you already know exactly what your return will be if you are outbid. So there's a formula and there's a rule to it, right? Because incentivizing bidders in real life can be done, by back channeling, or this is mathematical and it's fully transparent. So everyone can
Programmatic.
Everyone can see, right? If the next bidder bids 5.5, they will get exactly this amount back if they outbid. And so what the calculation, the formula does as well, is that the more your bid is an increase compared to the standing bid, to the current bid, the more you will get back as a percentage when you're outbid. So imagine if, for example, the return was a fixed 2%. So the more you bid, of course, the more you get.
Okay.
2%. I'm saying if ever it was fixed. For us, it's not even fixed. For us, the percentage itself increases. But even if the percentage is fixed, if you have a 10% return, right? You put 10, and if you get outbid, that means you get back 11 because you get back one more. But what we've done is that when you bid 10, this percentage is not the same if the previous bid was 2 or if the previous bid was 5. So depending on how much more you increase your bid, the more percentage you get back when you are then outbid, right?
Okay.
And so what that does is that it incentivizes people to bid closer to their valuation, to what they think their thing is worth faster, because the higher you bid, the more return you can make. And so we've seen this on our platform, on Cryptograph, for example, when we sold a Cryptograph, and it got to several thousands of dollars in 2 bids. Right? We sold the first thing that we sold, the first Cryptograph that we sold for close to $20,000 in only 12 bids, I think, 13 bids, because they went up very fast, because it's in your interest to not bid very little. And this is one of the very interesting behaviors that we see with the auction system, is that you can get much faster to the final bid.
Exactly. So not only is it incentivizing people to bid as close to their max value as possible, because the reward, if they're outbid, is then greater, but it also encourages people to bid as fast and as soon as possible. Because if I come in, at the last minute, so in almost every auction system today, manual or automatic, the incentive is to come in at the very last second and try to snipe your bid. And there's mechanisms that, auction extensions, there's all kinds of mechanisms they use to try and, remediate that, but it's not really effective. You're still incentivized to be the last bidder. And in this system, you're incentivized to be the first bidder, right? You want to be you want to be as early as possible, and you want to be as high as possible. And so ultimately, it's like, at least in my mind, it's the perfect incentive system for an auction, because you're trying to get these bidders to achieve the same outcome as the seller. And that's why it makes a perfect price discovery, because people are going to bid as soon as possible and as high as possible.
Yeah,
Sorry.
And it sounds, frankly, in that kind of arrangement, it's more efficient. It's less time consuming, especially for an asset like domain names, where it is just incredibly time consuming, both to look at the volume, to sort through, but then to keep up with each auction. So you're basically saying each auction, you can just bid once, figure out what you want and move on. Or if you want to monitor it and change your mind, you can. But it sounds much more efficient.
Yeah, I mean, the dominant game theory here in our system is, let's say you think the price is 100, or the world thinks the price is 100, whatever. If I can get my 99 bid in, and I can be the first bid, and then it goes for 100 at the end, I've nailed it. I've totally nailed it. And as that being the dominant strategy and the dominant game theory, if you're only maximizing for incentives, if you don't care about actually winning the asset, that's if you're
that option trader, if you're the trader, if you're the option trader, you just want to come in, and I don't want to exaggerate, but I feel like what you've created is an entirely new career, right? In the same way that the options trader became a new career in the stock market from these derivatives, you've created an entirely new career. And I think that is what's going to resonate with some of these people in our audience, is that you can now become a price discovery professional, where you may not want to be the guy that owns all these names, but you can participate in achieving price discovery and earn real income by doing so, just by participating in these auctions. Sometimes you're going to win, but as you master this, and again, if you win an auction where there's other people participating, that's not a bad thing. Now you own something that other people want.
Exactly. And there's going to be a secondary market out there for you to be able to sell it on as and when you're ready to do so.
Just like I buy a call option, and or let's say I sell a call option, because that's in essence what a bidder is they're selling a call option. So if I sell a call option, usually speaking, it's not because I actually want to own the stock. I want to earn the premium by selling the insurance policy to the guy that wants the option to own that stock if the price gets to a certain level, right?
Yes.
And so by placing a bid, it's like buying an option or selling an option.
Yeah, I would add as well that more than also not just the job of the trader that would partake in this auction, there's going to be a very interesting kind of job as to what is the best setup for our GBM auction, because our GBM auction has a formula. It has several variables. What percentage return do you offer to bidders? What time do you put for the auction? What extension do you put at the end of the auction, right? Whereas our system, you can decide that you only make 1% return, or you can do 10% return or 20% return. And so there's going to be a lot of discovery on what is the best way to, as a seller, as the best way to use this system. And they're going to be for people that are going to be experts in what is the best way based on what the current market is, what the current number of bidders is. This is the percentage that I need to try and hit. So definitely on the bidder side, there's going to be maybe some work. There's also going to be some work on the sell side to figure out, based on the asset and based on the market, what is the most efficient way.
So two things. One is GBM auction is the name of the auction technology that they built. Just wanted to clarify that. And then secondly is what's cool about what you're talking about on the sell side is that you get to play around with how you want to incentivize the market, right? So if you're the seller, it's like, I know I've got something that's relatively liquid. I'm only going to put out a 2% incentive. That 2% is split between all the different bidders in varying ratios based on, all the stuff we just talked about. If you've got something that you think requires more, let's say, marketing, more incentive, you can say, well, I'm going to put out, or maybe your margin is already high, or maybe you want to achieve real true price discovery. You want to maximize competition. Then you put out a 20% incentive. And now those bidders, if your thing sells for $100,000, $20,000 is going to be split among the bidders. And the guy, let's just going back to the theoretical from before, if it's $100,000 end sale price, and you were the first bidder and you bid $99,000, you just made $19,900, and you didn't win the auction. You weren't the seller. You weren't the platform. You just bid. All you were was a bidder. You bid in the auction. You happened to be the first bidder. You knew it was worth $100,000. You bid 99, so you're just under what the actual real price was. And so now that $20,000 incentive is going to go to you. Well, it is going to be split among you and whoever the other bidders were. But if you bid 99,000, only one other bidder came in and they bid 100, you just made $19,900 just for placing a bid. That's it. And that is what we're talking about. That's why this is revolutionary. For me, as somebody who has really just obsessed with price discovery in all markets, but obviously particularly in domains. I mean, when you guys started telling me about this, I was like, oh my God, this is, just get your head spinning.
It was a fun chat. It was a fun chat for sure.
Yeah.
And it is, neat to see and hear this new mechanics make sense. So how many people are participating right now? Where do you get your sellers? Where do you get your buyers? What are the numbers like?
Sure. So obviously we started, as we're built entirely on the Ethereum chain, in order to participate in our Cryptograph auctions currently, which is where our first application of this price discovery is currently being rolled out. You need to have the Ethereum cryptocurrency to be able to participate. So that is already a smaller portion of the world. And for those that don't have it, there is a hurdle there to get it. It's not as simple as using your PayPal yet. You do still need to go and find Ether. But
coming soon to a theater near you.
Yeah, exactly. Totally. And indeed, the next iteration of our platform will make that whole thing a lot easier for people, because it is a big hurdle for the whole decentralized application world at the moment, that there is this friction for currency.
To be fair, your target audience for the items which you are selling, which are cryptographs, basically digital art that is inherently and provably scarce. It cannot be replicated. It cannot be distributed, or there's nothing. It's absolutely scarce. The people that are going to be interested in paying a premium for those types of items are going to, generally speaking, be people that are currently using cryptocurrencies and likely Ethereum.
Totally. I mean, yeah, the early adopters of this space are those that already understand the concept of digital scarcity, which is a concept that is not it's not second nature. It's an abstraction that takes some understanding, and but
it is going to roll. It is going to roll over the world like a tsunami over the next.
It is indeed. I think we're definitely all agreed on that. And so, in our case, with our cryptographs, we've been seeing, which are essentially what are called NFTs, which stand for non-fungible tokens, which is basically a digital asset, or a token that is on the Ethereum blockchain that can't be mutually exchanged for another. It's not fungible. It's a unique representation of a unique asset.
Mm-hmm. And, fungible is like a US
like a dollar.
An actual dollar note is a fungible item. You can exchange $1 note for another dollar note. There's no gain, no loss. They're identical. There's no differentiation other than maybe a serial number, which makes it just very slightly non-fungible. But these are non-fungible, which means that they are absolutely unique.
Yeah, exactly. And so already we're talking to a rather niche market, but it is one that is growing. It's very, very young. I mean, the whole world of these NFTs and digital collectibles is really only about 3 years old now. It started in late 2017, mid 2017, with the advent of something called the ERC-721 token, built on top of the Ethereum blockchain. And one thing that people might have heard of that was happening around that time was a collectible sort of trading game called CryptoKitties, where people were buying and selling cats. Each cat was unique, and each cat could breed with the cats to create new unique cats. And it was kind of like Tamagotchi, if you ever remember that, on the blockchain. But each cat was unique, and there was this whole world of experimentation of these digital asset tokens that represent the uniqueness of these things. And that kind of blew up quite amazingly. And we saw some cats selling for $250,000.
Yes, and just for scope, like the folks that created CryptoKitties raised tens of millions of dollars subsequently. I mean, and from the biggest VCs in the world, from Union Square Ventures, Fred Wilson, to Anderson Horowitz. I mean, just so people understand, a little digital cat, even though that also doesn't really excite me, the concept that you can create inherent and absolute digital scarcity, and you can take something which is now digital, you can't touch it, but it cannot be replicated. And it's hard to emphasize this point enough. Like, up until 3 years ago, when that ERC token was created, that didn't exist.
Yep.
There was no such thing as digital scarcity. Quite the opposite. The biggest problem we have on the internet is that, or one of the biggest problems, is that anything that exists in digital form can be replicated.
Totally.
And so this was a really, really important innovation all in and of itself. The ability to create true digital scarcity was in and of itself a monumental revolution.
Totally. And it absolutely is. And it's only just beginning. And, you're right in everything previous to this was, if there was such a thing as digital scarcity, it was only ever artificially enforced in a centralized kind of
through laws.
Right, exactly. And here we have, truly
programmatic,
this decentralized programmable digital scarcity. Yeah. Exactly. Which is super, super cool. And so that's obviously, it was around about that time in early 2018, like I discussed, that we were looking at this as a group of entrepreneurs, and we were just like, this is just too awesome. And so, and hence where we are now. But we've seen some really interesting activity on our platform already. I mean, we're still obviously fairly young, but we've had a lot of interesting experiences as well, because obviously a lot of our creators on Cryptograph are fairly high profile individuals. I mean, we've had Paris Hilton create Cryptographs, Vitalik Buterin, Seth Green, Ashton Kutcher. These are mainstream names that people know and that have global fame behind them. And so that's been very interesting in kind of sort of putting this concept and this idea out into the world of people who haven't even heard of cryptocurrency. May have heard of Bitcoin, but that's probably about it. And that's been very interesting to see. But definitely amongst the kind of early adopting community that we've alluded to, we've seen, as Ed said, some really interesting behavior. Like with Vitalik's, which was the first piece to ever go out, we saw people sort of coming in and being like, placing a bid, and then you could see people begin to realize, hang on a minute, like, I just
somebody outbid me, and I got more money back than I bid.
Exactly, and it went to kind of like 10th with this kind of like 4 or 5 bids of people kind of like, what's going on here? And then some guy came in with like 50th. They were like, hey, I get this now. Like, it's worth a ton. I'm going straight in with this huge bid because I'm going to maximize my incentive. And so we've seen that, live happening on the system, and it's been very interesting to see that learning curve in people and just the behavior that you can track. And
Vitalik Buterin, by the way, for those who don't know, is let's say arguably one of the creators of Ethereum, sort of the prodigal.
Yeah,
the prodigal the prodigal leader of the Ethereum community.
Yeah, he's the guy that put out the white paper back when he was, I don't know what, like 19 now.
Yeah.
And yeah.
Is this a good time to ask, why Ethereum, why not Bitcoin? What's the difference? Can this be replicated with any cryptocurrency?
So what's the time?
Yeah,
Say that again?
It's always a good time, Ed said. It can't be replicated, no. Like once you created that unique token on the Ethereum blockchain, that's the token of ownership. That's where it exists.
No, I mean, can your entire system and concept
be used on other chains? So that is something that we're very much looking at in the near future, especially because right now on the Ethereum network, which is still not, it's in the process of trying to scale, but it's still not at scale yet by any means, is facing this gas price inflation because the demand to use the chain is growing exponentially, particularly because of this, what we would call DeFi, decentralized finance, kind of boom of innovation that's happening right now. It's causing a huge amount of transactional demand. And there's a lot of other sort of what we call layer 2 solutions or blockchains out there that are working to try and create layers where a lot of that transactional throughput and demand can happen sort of on a side chain or off chain in some way, but the actual record of what happens on chain, on the Ethereum blockchain, as a way to try and create the utility and the throughput that you need to scale without having to use the current basis infrastructure of Ethereum because that's getting expensive. Now, when it comes to why we started this on Ethereum and not others, there are a variety of reasons. One key one being that the development infrastructure and interface of Ethereum is very friendly. And there's a lot more that you can do on Ethereum with programmable logic and complex logic, really, that you can't do on things like Bitcoin. Like the smart contract layer of Bitcoin is that's not what it, because that's not really what it was designed for, is not the same to what you can do on Ethereum. And because of our auction system being really quite complex in terms of its logic, in terms of the trading rules, in terms of many of the other sort of rules that we've programmed into the Cryptograph system, we needed that network that we could build that level of complexity on, and Ethereum provided that. The other thing that Ethereum provided is it is a very early. It's the first mover in that space of this kind of programmable complexity that allows you to do, and with that comes a lot of liquidity, a very big development network, a lot of users compared to others, and those, it has those network effects for that use case, and that's something that we want to be a part of and tap into. And there are a few other reasons as well, but those are really the two core ones as to why Ethereum.
But it cannot be replicated on another system by somebody else because it's been patented. Yeah.
So yeah, exactly. Yeah. So the auction system and all of the proprietary stuff within that is indeed patented. So
it sounds brilliant. Like you've done tremendous work on it. Now maybe this is too many steps away, but this sounds like such a game changer for digital assets. What about tangible assets? Do you see this ever either fully being applied or changing the mechanics or structure currently traditional for the English auction system for tangible assets?
This is a deep rabbit hole. This is it.
But basically, the short answer would be yes, because what really matters is what is the bridge between the physical world and the digital world. And if that can be solved, or there can be a trusted party to say, yes, this token represents this painting, for example, right? Okay. And you can know for sure that this is the correct painting, because sure, you can't forge the token, you can't steal the token, but what if you forge the painting and whatever is the thing that identifies the painting in the token, you forge it too, right? So once you're in the digital world with blockchain, you're safe, and you have very complex mathematics and cryptography that ensures that you're not going to get stolen or nothing is going to be forged. But the bridge between the physical and the digital is where there is work to be done. But if something that's trustworthy enough as a solution can be built, then you can bring the same kind of auction mechanism in the real world. Like imagine you're on Christie's and you use them to buy a painting, or even you're in a room and you have your app and everyone is bidding on this because you trust this app to run the auction. Well, as soon as you get on the physical world, you need to trust a party or a system, a bridge between the physical and the digital.
Yeah, there's two variables that really matter. It's trust and ownership, right? So you need provable trust, provable ownership. And so taking a physical object, physical asset, and ultimately making it, giving it a digital proxy, you need to create provable trust that the object that's represented in the digital proxy or token, as it may be. So this is the whole world of what do they call it? What are those tokens called that represent a physical asset?
Non-fungible.
Yeah, the NFT technologies.
Yeah. So basically, creating an NFT, a non-fungible token that represents a share or an entire physical object. You need to be able to prove ownership and be able to prove transfer of ownership of the physical object itself, and then you need provable ownership. So, in the example Edouard gave with Christie's, of course, you trust Christie's that they've done their due diligence to make sure that this is a legitimate painting is what they say it is. And then you are trusting Christie's to provide that transfer of deed or transfer of ownership from one party to the other. And as much as you think you can trust Christie's, the reality is, as we move forward in the world we're in, trust is going to become ever more scarce. And so this provable trust, this digitally provable trust is something that is absolutely critical. And this is really the big frontier. I mean, this is the future of finance, is the ability to tokenize real assets and further distribute the ownership, because physical assets are highly centralized today. And so this applies to domain names. Even though a domain is actually a digital asset, the only reason we can't auction a domain name on Cryptograph right now today is because the domain name system under ICANN is relatively centralized. There's some degree of decentralization, but it's primarily centralized under ICANN. And there's no currently available system to say, okay, I'm a bidder, I've locked up my bid on the platform. And the asset, let's say the token that I'm bidding for is locked on the blockchain, right? So money's on the blockchain, asset token is on the blockchain, but the domain name itself is living at a registrar somewhere, and it still requires somebody to go in and then transfer it from one party to the other. And so there's that bridge needed, as Edouard was alluding to. What I think is really exciting from my perspective, and why I think that partly why I wanted to bring you guys on DomainSherpa, and why I think the domain community will have maybe an even better understanding of the potential here and than others may, is that the concept of a domain registrar is quite interesting. And I think that it is the future of all of these NFTs. So, in my mind, so if we go back in history, the foundation of the entire economic and financial system that we operate with in the Western world, the foundation of it is a trust company, right? So you have a trust company. It's actually a New York trust company. So a New York trust company, basically takes reserve assets, holds them in reserve, and it is exactly what we're talking about. It is a trust company, right? Like, through mountains of regulations and laws, you can, as the average citizen or as an investor or whatever, trust that the underlying reserve asset is being held in trust by a trust company. And then once that is established, you can then create derivative products on the reserve assets. And that's ultimately what, the US dollar is, right? And ultimately what the US dollar was, right? It was, you had gold sitting in a vault, and then because the value of that gold was known, you could then and its existence was known and trusted, then you could then create derivative products on top of the value of the gold, which then could make the gold more readily usable, tradable, exchangeable, whatever. We don't need to go into the history of money. But the point is that the existence of a trust company is what gave birth to the free market capitalist system that we have today. From an economic and a financial standpoint, it all comes down to reserve assets and their ability to be trusted. They're trusted in their existence, trusted in their ownership, and trusted in their ability to transfer that ownership from one party to another. And then that is what gives birth to the bazillion X bubble of derivative products that was created on top of it. And the entire economy that we live with today, it's all built on, the building that all of us are in, the buildings that each of us are in, the title to that building is held in a central registry, which in essence, today is a government central agency, but it could very well be, it's just another form of a trust, right? Although probably not as good. And so that is where I think, like a domain registrar is ultimately a digital trust company. And I believe that the concept of a domain registrar will ultimately be the same for all of these NFTs. You'll have a registrar that acts like a digital trust that holds these things and then allows for the NFTs to be traded freely on any platform, like Cryptograph or anywhere else. And so that is a very long way of answering your question, Tess, is that yes, absolutely, unequivocally in the future, physical assets will be able to be traded on Cryptograph. But we need that bridge from the physical world to the digital world. And that's, and there's a lot of people working on that. That is the single, at least in my mind, the single biggest opportunity on earth today, more than energy, more than anything, is the ability to take physical assets, tokenize them, put them securely on a blockchain, and allow them to freely trade. You're talking about hundreds of trillions of dollars in value.
It's super exciting. I mean, I think we all know we're on the cusp of the world changing bit by bit, and it's folks like the two of you who are really building this and creating change. So right now, is digital art the exclusive product that is auctioned? I don't know if product is even the right word.
Yeah, yes. So the first kind of issuance of cryptographs that we're putting out there are fairly, simplistic in what they are as a medium. They are digital images created by these individuals.
Okay. Was that chosen for a specific reason?
Yes,
like transferability.
Yeah, well, mainly some of these people that are creating these cryptographs are some of the hardest people in the world to get to and to get them to do things. And so we needed to start with something that would make sense to them, that's easy for them to do, that's, this is the first time Paris Hilton has ever created a digital collectible. Like, she drew something on her iPad. This was a new experience for her. And, if we asked her to go to a studio, do X, produce that, that's a whole nother process, right? Here, with very low barrier to entry to get interesting creative content. And so that's why we started here. But the Cryptograph vision, and indeed what will be coming further down the line, we're already working on, is not just digital images, but already we have two artists that have launched recently, one guy called Euromiro and one guy called has a pseudonym called A Lot of Money, rather funnily. These are two crypto artists who, exist in this burgeoning crypto art scene, which has really just started since late 2017, really. And they're creating GIFs. And, Euromiro created an entire piece of video art that was created in VR for his Cryptograph. And, we'll have cryptographs coming out where people have produced audio files, songs mixed with video. People who have done 3D designs of fashion or shoes or, whatever it might be.
Okay. Wait.
Yeah.
Music?
Yes.
Huge category.
It's a big one.
Huge category.
Brief bunny overview.
Bunny overview. Okay. Yes.
Like, can you sell multiple instead of it? Maybe that's not non-fungible. But can you sell, can this cut out the entire middleman between? Go ahead.
Absolutely.
Yes. So I mean, let's paint a really quick little picture. But imagine you've got a song today, right? You've got a melody maker, a beat producer, a lyricist, a record label, and a performer, right? And these 5 things come together to produce a piece of work that goes out there that is sold as a hit single, right? Now, let's imagine that the beat producer in that stack creates a beat, creates a new piece of music. Now imagine that they issue a Cryptograph token that represents the ownership of that beat, perhaps. Represents the ownership of that beat, but then perhaps this person says, okay, actually, whoever owns this beat, now you start playing with licensing and IP. Actually, whoever owns this beat has the commercial rights and the monetization rights of this thing that I produced, for example, right? And then the beat producer takes that piece of work and he issues it as a cryptograph. And now it's out there in the global world of trading on this GBM system. And whoever purchases that beat is now the owner of that beat and can monetize that beat in the way that they want. They can use it in their hit single. So essentially, as a creator, you create your work, you create your art, you can self-publish it, put it into a price discovery system that will find truer, fairer value for your asset, and will hard-code it into the system, give you a perpetual share of the revenue as this thing.
A royalty,
forever,
right? So
in essence. A royalty in many ways. So, today, if you're an artist, right, like David Hockney, creates a painting in the 1980s, sells it for £80,000. It sells a year ago for £103 million. He'll see basically
none of that, zero.
And in this system, I could self-publish my digital piece of art here, and I would be guaranteed whatever the original contract was that was signed, the revenue share of this thing's trade 5 years from now, 10 years from now, which might be 10.
Residual incentive is baked into the system, which is a great segue, totally. Unless you have another question about the music test, but which is a great segue into the secondary market, which right. I think is also super interesting. Yeah. So talk about how the secondary market works. Like, so you have this auction, right? It sells for $100,000. Coming back to the example we used before, XYZ.com sold for $100,000. I bid 99. I got a $19,900 incentive payment as a bidder. Test won the auction for $100,000, and now Test decides, sending my kid to college, I'm gonna sell this thing.
Right.
So now Test goes out and sells it on, puts it on an auction.
Yeah. So the way it works in our system on the secondary market is again all about like the truest possible form of price discovery and selling it always for its truest possible market value. And so you own it now, Tess, and you bought it for, let's say, 100. Right now, as you own it, you'll be receiving offers on the secondary market from lots of other people out there in the world. I'll buy it from you for 10, I'll buy it from you for 20, or I'll buy it, whatever. And you as the owner can say yes or no. But programmed into our system is the ability that you're only able to accept the current highest market offer, right? So if there's someone out there offering you for 10, but there's someone out there offering for you 100, you can't accept the offer for 10. You have to accept the offer for 100, which means that we've also built a system that's built on game theory that rules out room for black market dealing, right?
Yeah.
You can't say, hey, I'll accept the 10, and then give me 100 in cash, right?
Yes.
Because there's someone else out there willing to pay you 100, and you can only accept the current highest offer. So that's just...
Yep.
And we've been able to do that thanks to programmable money in this smart contract system. But anyway, so that's another part of it. But you're
fraud
getting
be gone.
Yeah, exactly. So you're getting these offers all the time, right? And what's interesting is on this secondary market offering stage, people still make the incentive return. So let's say you bought it for 100, and I say I'll buy it off you for 20, and then someone else comes in and says I'll buy it off you for 40. I make, as the bidder of the 20, I'll still make a return. So there's this kind of gray market offering stage where you can still make returns, which is, again, very interesting. Now, let's say someone does put in an offer for 150, and you, Tess, say, okay, great, I want to sell for that. You accept that offer. What then happens is another auction immediately starts, let's say for a period, in our case, it's 36 hours. And the first bid in that auction is 150. So you as a seller will get at least 150 or more by the end of that auction for the asset that you've decided to sell. But the point is that a cryptograph is always exchanged via an auction system. It's always exchanged through price discovery because the idea is that it's always going for its truest market value at that point in time.
Mm-hmm.
And that's how the secondary market operates. And as an owner, you can obviously accept offers. But if you want to signal to the market that you're willing to sell this at a certain price, you create something called an auction trigger that we've created, really. And you'll say, okay, my auction trigger is 150. So anybody who submits a bid into the system for 150 for my asset, it will immediately trigger the new auction and lock that capital in as the first bid of this new auction. So that's how the secondary market of Cryptograph, the dynamics kind of work. And that's how the secondary market for all of the assets in the future that are going to be sold on our system will continue to operate under.
It's exciting stuff.
That's fascinating. Yeah, we could talk forever.
As Andrew said, it's a rabbit hole.
No, in a good way. What else should we hit before we go, Drew?
I think we touched on most of the stuff that got me really excited. I mean, we didn't talk about my journey into becoming an investor in Cryptograph.
Oh, that's true.
Another one of the partners in Cryptograph is somebody that I met when I was living in Venice Beach for that short stint, and anyways, we had discussed at length a variety of different domain names for a variety of different purposes, and got to know each other. And when he got involved here, he had reached out to me. And as we were discussing what the project was, I was like, oh my God, I'm so interested in this. After speaking with these guys, I jumped in head first. It was, it's right up my alley. It literally is it's like, boom,
And it was great for us as well, because I mean we have a few investors who were part of our our early rounds, and some are like love the idea of digital scarcity and this idea of cryptograph's great. Others are like, oh my God, this price discovery system, right? And so investors are investing for different reasons. But the great one with Andrew, I remember on the first call I had with him, I had a guy on the other side of the phone who's like, I'd spent the last 20 years of my life understanding price discovery systems, and I'm like, oh my God, this is amazing. A kindred spirit. It was great. I mean, we got off right on the right footing for sure.
Yeah. So I'm very excited. I think it's really cool to see the early adoption of the system. Seeing these celebrity cryptographs being sold off and people bidding for them, and people getting rewarded for bidding. I mean, just seeing the system work. Yeah. And it's unfortunate with the Ethereum gas pricing inflation, but you've proven your concept. And I think in the next iteration, it obviously just gets stronger. And I'm obviously I'm biased towards where I want this thing to go, but I am so excited for when we can finally introduce this into the domain market, because there's when you're looking at a digital doodle, it's an ego thing for the most part, right? The people that are bidding, it's about there's some social signaling, there's it's ego driven. And with domain names, there's an actual utility, right? With domain names, there's a calculable value. Not that everybody understands that, but it allows for a framework that is just enough to really instigate the game theory, right? Like I got into one of the auctions, right? And Vitalik Buterin's, and I was watching, and I was like, I don't know what to bid, because I don't know if this thing is worth 100 ETH, 1,000 ETH, 1 ETH. I have no clue. I have no bearing. And ultimately, that's what the system was built for, right? Is to discover what something like that is worth.
Yeah.
But I think it gets even more exciting when you get something that's just has low liquidity, low velocity, but some degree of framework around how to value it. And that value may differ from person to person, utility to utility, but there's still a framework to use that will instigate that game theory, where I can say, okay, I know this domain name is worth at least 50 grand. Like, I know that, without an auction, I can go sell this thing in 24 hours for 50 grand. It'll probably go higher than that. But I know that if I bid 49, I'm not going to win it, but I'm going to get a nice reward, right? And so giving people that little bit of confidence in a value range just exacerbates the competition, exacerbates that game theory around, the reward system. And I think that's where, it gets really cool and really exciting.
Yeah, I think for sure there's a big, the GBM system, when it hits the domain name market, it's going to be exciting times for sure.
Yeah. Never mind when we take over the entire music royalty market.
Indeed.
So seriously, what do you think domains will be the next asset you introduce, or what do you think is an actual possible time frame for having domains be part of this?
So over the next 6 to 9 months, particularly expedited since there's gas price inflation in Ethereum, we're going to be building out layer 2 of Cryptograph that will consist of everything that we need to solve for Cryptograph to continue over the long run, to allow people to bid in other currencies, to solve for the gas fee issue. We'll also be creating this white label, fully customizable system that anyone can use, that will have our small fee structure encoded into it. And that price discovery system which will have a variety of price discovery systems actually on it that you can utilize. That will be, including our proprietary GBM one, that will be somewhere that we will see many assets traded, whether it's a DeFi ERC20 token, or whether it's a domain name, or whether it's a unique 3D design made by some guy from somewhere. Whatever it's going to be, they can essentially come here and they can be like, right, I need to find liquidity for my fairly illiquid or unique asset. I'm going to create my own discovery mechanic. I'm going to click go, and I'm going to share my link with everyone. It's going to be out there on the marketplace, and anyone can come in and participate.
Yeah, there's this car auction platform called bringatrailer.com. Bringatrailer.com. And it's just amazing. It literally could not be more simplistic. It's like the most basic, simplistic auction system ever. But there is nobody that has the volume and like quality of classic cars. I mean, they have everything. They have motorcycles. They've got, junk cars. I mean, that was how it started. It was Bring a Trailer was like, look, I had this piece of crap in my garage. It doesn't even run. Bid for it, buy it, bring a trailer so you can, tow it away.
Take it away, yeah.
But now it's developed into, you've got the world's most valuable cars being sold every single day on there. And it is so much fun. And it's such a simple system. And I'm on there every single day. And, every day I think about it like, oh my God, imagine if this was incentivized. Imagine if I could bid on that V12 Aston Martin, and I know I'm not going to win it, but at least I'd win something, right?
Yeah.
I mean, it's so exciting, not just because, oh wow, I'm going to get this incentivized ability to bid, but it's like, oh my God, we're really going to discover what do these things actually work.
Yeah.
We're going to actually take all these nascent asset classes that have such low exposure and a high barrier to entry, and suddenly you're going to exponentially increase the pool of participants in these markets. And oh man, I'm so excited about like the evolution of this thing. I really am.
Yeah, and it's going to be definitely an exciting.
Don't disappoint me.
We would.
I have a question. When should we follow up? I feel like I could talk to you every day forever and learn something new. But when do you think will be that we're in the next phase? That
6 to 9 months. No?
Yeah, six to 9 months. We'll let Cryptograph 2.0 will be out there. There's a couple of lower layer technologies that are still in development that we will need to complete that vision, but they're coming on well, and we're confident in their ability to deliver. So yeah, we're working on a 6 to 9 month timeline to release that 2.0. In the interim, of course, there will be many more cryptographs coming to market as and when there are viable moments to sell during gas price fluctuations, and there'll be even increasing.
Cool one coming up that I want to bid for. The one, I think the guy's name was Alec
Monopoly.
Mr. Monopoly.
Yeah, his is currently on auction, I think.
Is it live now?
Yeah. There's 17 hours left.
What's it at?
It's at 5.5F.
Okay. That one's really cool. And he's like a really known graffiti artist
Yeah,
he's made this digital one, and it's got his classic Mr. Monopoly at the center of it. And I just, you know, I trust my instincts on things. As you guys know, I don't really do a lot of due diligence. I just, if my instinct said go, I go. So I for whatever reason, man, I got slightly excited about, you know, Vitalik's because it's Vitalik. And so there will always be a market for it. There will always be demand, and probably the price will always go up. But that one is cool. And
it is very cool.
Think it's, no matter what it sells for, I think it'll be undervalued. I think that is one which will be significantly worth more.
Well, 17 hours left. So go get in there.
We have even cooler things coming in the pipeline very soon.
The next two coming after these two is pretty cool. Anyway, so we got artists coming out. We've got a whole array of musicians coming out that have done artworks. They haven't, not music, but they've done artworks. Music's coming a little later. And then there are other stars from around the world. Obviously, you know, fame is a regional thing. It's not just existing on the west coast of the USA. It's elsewhere. And
let's track down Martin Skelly. Let's track down Martin Skelly. Cool. You know, the pharmaceutical Satan. And you know, he's the guy. He bought the Wu-Tang when Wu-Tang issued that one
Wu-Tang album.
They produced one album. They produced an entire album, and they just sold one copy to the highest bidder. I think he sold for $2 million. And Martin Skelly bought it for $2 million just prior to going to jail. And I mean, man, that would be cool to auction off. Is like, and that could be done now, right? Because it could be. I presume could be put on a blockchain?
Yeah. Or you would have at this stage it would need to be a digital asset. Like, I mean, we have.
But that could be done like pretty easily.
Yeah.
Right?
Yeah, I mean, in our case, though, with Cryptograph, because we really are all about the one of one, where people have created something physical, like in Ashton Kutcher's case, he created a physical sketch.
Yep.
We destroy the physical original. So
totally.
The only existence of this thing is in the digital domain. So
that's what I'm saying. Is you take the CD, you digitize it. I mean, it's already digital, right? It was digital when it got put on the CD.
Yeah.
And you just burn the CD, and then boom, that's it. It lives on the blockchain, one copy.
It's true. It's true. Yeah.
And that would trade for way more than $2 million today. Way more.
Yeah.
Will you just tell me for a minute what it's like on a conversation with someone you want to bring into auction an asset? What are the? I mean, I feel like the objections to overcome must be so enormous. Who do you target? How do you choose them? And how do you progress? How long does it take to negotiate or educate?
Yeah,
well, the guy Tommy that brought me into this deal is kind of the guy. He's got all these relationships.
Yeah, so Tommy's definitely our partner that does a lot of that work for us and does it very well. But you know, on avenues that don't involve Tommy, that are other avenues to talent and creators. Mm-hmm. I mean, all we're really doing 24/7, like we're doing here, is education. Like that's pretty much the first thing is education.
Yes.
And you know, it's usually good to start with like, before this technology, you couldn't have something scarce on the internet. You couldn't create that kind of value. With this technology now, you can create this kind of value. And people kind of go, interesting. And then you talk about blockchain. Some people, you mention the word blockchain and they run to the hills. They're like, I don't even have an iPhone. Like, don't talk to me. Other people are like, wow, this is really cool. And so, you know, you've got to play off whatever the cues and the understanding and the level of knowledge that this person has and the level of curiosity. But curiosity is where it all really starts. Like that's where you begin. And then you just slowly build up layers. Okay, digital scarcity. Now imagine with digital scarcity, these new kind of business models that you could create. Now imagine that these business models are more liquid and you can program rules. And, you know, and then you slowly get to the end of it and they're like, wow, this is amazing. And the really intrinsic part of Cryptograph specifically is this philanthropy element, right? So every Cryptograph is forever raising money for the cause that the creator cares about. So, you know, for a creator in many ways who don't necessarily need more money, but they want to do good, this is a whole new way for them to be able to monetize their talent and their profile as a way of doing good forever. You can't destroy Cryptograph. It's a
In
perpetual
theory,
legacy.
yeah. In theory, it's creating a sustainable income source for
Totally.
whatever cause it's been attributed to.
Exactly. So it's almost like a new passive fundraising tool
Totally.
for charities and foundations out there. And that's a big draw for a lot of our creators. They're really into that. And so that's almost kind of where they start. And then when they see that succeed, they think, wow, actually, this is a whole new way actually for me to monetize my own stuff as well. Like, you know, and if I'm always doing good with what I'm doing, that's a really nice added bonus. And so as kind of what Andrew was saying before, it's baking all of these kind of layers into this system. And that appeals to a lot of talent. Secondary market revenues that are enshrined and are always going to be received by me, they're really interested in, because usually they get screwed out of a lot of that by a lot of the kind of,
there's no breach of contract. There's no people, you know, changing their mind or backing out on what they said or not doing what they said they were going to do, or you know, just there's no screwing somebody, which is, you know, unfortunately the reality of the world. This is just baked in. It's math. It's on a blockchain. That's it.
Yeah, exactly. And that does appeal to them. And it's also like with anything, you know, you start with one network and then it grows, right? You get 5 or 6 people to do it and try it and see if it's success, and then that turns into 10, 20, 30, and you know, the network system of circles of networks grows. And so the road, getting the ball rolling to start with for us was a long road. It took time. It was, you know, a lot of hustling, really. That's what entrepreneurs do. It's a lot of knocking on doors, a lot of trying to get people to listen, et cetera, et cetera. And then eventually, you know, the doors and the dominoes begin to fall, and the snowball starts moving. And, you know, we're now at a stage where it is now moving, and that's really, you know, gratifying to see. And, you know, more new creators of different kinds from different worlds coming on board every day. So, yeah, it's getting very exciting.
Super.
Go Team Cryptograph.
Yeah. Go Team Cryptograph. Love it.
Very cool. Well, thank you for taking so much time for dumbing it down for us. And mostly just for what you're doing all across the board is just phenomenal. Really, really exciting. Please keep in touch. I'm sure Andrew will keep you on your toes. And I can't wait to see someday, somewhere, where there's a domain auction on Cryptograph. Kudos to you.
Coming soon.
Totally. Exactly. Well, thank you very much for having us, Tess. It's been an absolute pleasure. And we'll of course stay in touch. And again, looking for that day the domains are on Cryptograph. Absolutely.
Super cool.
Good to see you guys. Good to catch up. Great chat.
See you, Andrew.
And keep it up. Very exciting stuff.
Ciao, guys.